Good afternoon and welcome to the annual general meeting of the company. My name is Maxwell Pack, Chairman of the Board of Directors. It's now noon, the time appointed for the AGM. May I introduce my board colleagues, Christopher Burrows, Roger Whitlock, Pippa Latham and Patrick Reeve. Also present is Will Fraser-Allen, Managing Partner of Albion Capital, the company's investment manager, who will give a presentation on the results of the company for the year ended 31st of March 2023. The quorum for the AGM is 2 members entitled to vote in person or by proxy. This has been met, and so I declare this AGM open. The notice of the meeting has been in your hands for the statutory period, so I'll take the notice as read. Due to the success of last year's virtual meeting, and in order to maximise the engagement of all members, the board have again acquired the services of Lumi to broadcast this year's AGM, which enables members to participate fully in the meeting, which includes voting on the board's proposed resolutions and a question and answer session. Before we move on to Will's presentation, the next part is procedural. The resolutions will all be voted on by way of a poll, which follows how the company conducted the process last year. Votes received under the poll will be added to the proxy votes that have already been received and verified by the registrar, Computershare. If you've already completed and submitted a proxy prior to the meeting, you don't need to vote again on the poll unless you wish to change your vote. I now declare the poll open. The list of resolutions will automatically appear on your screen, and you have 3 options for each resolution. You can vote in favour, you can vote against, or you may withhold your vote. Please select the option that corresponds with how you wish to vote. And once you've selected your vote, the option will change colour and a confirmation message will appear to indicate your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, reselect your choice. Now moving on to the main business of the meeting. Following the manager's presentation, the directors and manager are happy to answer questions from members about the presentation or the proposed AGM resolutions. I'd like to thank members who've already submitted their questions and queries through to the chairman's email address. We've already received a number of questions. In the interest of meeting efficiency, we propose answering these questions on a thematic basis. If you wish to ask questions, please select the message icon from within the navigation bar and type your question at the top of the screen. To submit your question, click on the arrow icon at the right of the text box. I'll now hand over to Will Fraser-Allen for his presentation.
Max, thank you very much indeed, and welcome to all the shareholders that have joined us today. What I would like to do now is take you through my presentation, which goes through the results for Albion Enterprise VCT for the year to 31 March. So if we move to the next slide, as we normally do, I'll be covering sort of performance data, key highlights in the year, having a look at some of the new investments that we've made, and then to talk a little bit about investment strategy, and also looking at prospects. We have just announced the Q1 results, so that's to June, so I'll be able to cover those as a final part of my presentation. So if we move to the next slide, just in summary, we've NAV total return is now 197.47p, and that's with an underlying net asset value of 128. I think in terms of the performance for the year at 2.12% shareholder return, that is, as shareholders will appreciate, is behind our target of 5%, and I'll talk a bit about that. But the dividend continues to deliver a yield of over 6%. Next slide, please. And I suppose the background is important, just to the shareholders will be very familiar with the world that we live in. But it is worth just reflecting on the sort of key themes that are sort of impacting the world in which we operate. The global macro and geopolitical environment has not got any better. Uncertainties remain, and that is going to have an impact particularly in terms of confidence. And what it has done is it's led to an inflationary environment with increasing interest rate rises. That has, over the last 18 months, resulted in valuation declines across the quoted technology market, and that in turn impacts our valuations. I suppose the big theme that we're seeing at the moment is a very significant reduction in M&A activity, as you'll see in a moment. And as I've alluded to, that has those factors have led to a below target return. But I think it is important to highlight that it has still been a positive return when many technology funds have been unable to do that. And again, we'll talk around that. If we move to the next slide. If we put the performance into context, the 10-year performance at 97.7%, so i.e. an average of just under 9.8% a year, is on a longer term basis well ahead of the 5% dividend yield target. So that is encouraging, but it is worth reminding ourselves that in venture you do have periods of stronger growth, and then as we are currently having at the moment in the context of the world we live in, you do have less strong. So it's important to always look at the longer term results as well as being cognizant of shorter term performance. Next slide, please. So if we dig into the results in a bit more detail, fundraising, we raised 16.4 million, which was less than last year, but we still raised the full target. So each year we consider what fundraising is required. So we tend to tailor the fundraising amount to the requirements of the fund. So given where cash and given the very strong exits of last year, which you can see 10.2 million, we have a smaller fundraise. This year, that M&A activity not coming through saw a significant decline in terms of exit proceeds. But again, these exits go through cycles, and one would expect that to, as the world improves around us, so too will M&A activity. We did take the opportunity to increase our investment rate last year, a total of 12.5 million, which was up on the previous year. And I think the interesting point is that there were 13 new companies added to our portfolio, which reflects the scale of the opportunity last year. And there has been a little bit of slowing of investment activity since in recent months, but again, that's starting to pick up. Share buybacks, when you account for the fact that the fund has grown, hasn't significantly changed. Dividends are up because the amount per share increased, but also there are more shares in issue following the fundraise. We continue to pay dividends at the target of around 5% a year. Performance incentive fee, none this year, reflecting the below target results. Next slide, please. So in terms of, we look at what has driven the sort of 4.5 million of value creation in the year. It is very much dominated by a big uplift in Quantexa of 9.8 million. And that's the largest company in our portfolio. And I've got a couple of slides later on where I talk about this in more detail, because it's clearly a very important feature of this year's results. Converter saw some strong trading that helped to grow its valuation, new customers. But we did have had some companies that have had a tougher time and have seen slower growth. And I guess that's the sort of theme that we just have to be aware of, is that you have got large corporates, and we do back B2B software business who sell to large corporates. They are being slower to make decisions around particularly software acquisition, and they are themselves cutting their costs. So in that vein, Black Swan has been reduced, had its value reduced. Aviva, a health tech investment, that has sort of seen slower growth, but the other part of this is that there have been some quite sharp falls in quoted healthcare comparable companies on which we base our valuations. So that is sort of filtered through to the reduction. Aviva is still growing, so this is more a reflection of the valuation reductions generally and an element of slower growth. And then in terms of write-ups, Solidatus, which has continued to do well. Radnor House, our school, is growing its student role, and then the Evewell is developed its second site at Hammersmith, which is now filling. In terms of write-offs, a number of write-offs, and the full details of all the write-ups and write-down are in the annual report. But if we pick, Umotif has had a tough time, and in fact we have subsequently exited that for relatively nominal value, and the same applies to Oxentis. Both were just struggling to develop their product and market. Egress is an important investment, and I'll pick up on that. This is not it's still growing. It's a reflection of valuation multiples rather than any underlying performance of the company. So if we move to the next slide, the sort of key takeaway from this is that the portfolio looks largely the same this year as last year, which is a good thing, because it's very much our strategy has been to focus on healthcare and software, of which fintech is a subsector of that, and that now is by far and away those three areas of the bulk of the portfolio, which is exactly what we're seeking to achieve. And then the sort of more legacy investments of renewable energy is sitting at the 5%, and in fact, sort of other non-target sectors is down to as low as 4%. Cash is sitting at 26%, which is down a little bit on last year, but gives the company funds to both make new investments and support the existing portfolio. We move to the next slide. Again, this if you look at the stage of investment portfolio now, the portfolio is split by stage of investments. It's very similar to last year. Slight change in terms of how the number of employees. So on the whole, companies have more employees, and that reflects the investment being made by our companies in staff to grow their businesses. So this is all very much sort of in line with last year. You're seeing a portfolio where some 80% is of value is in companies with revenues over 5 million. So this is as some of the larger companies in the portfolio continue to grow. We go to the next slide. This is an important slide because the feature of investing in venture and to have good performance over the longer term in venture is that you need to back the successful companies as they grow. So back your winners is how we describe it. And this is exactly what you are seeing happening here, that the top three companies, Quantexa, Egress, and Pravica, now account for 33 or just under 34% of NAV. So there's significant value in those top three companies. Quantexa, I will come on the next slide. Egress continues to grow nicely, following an acquisition. That product set is gaining greater traction and starting to make really good inroads into the US. Pravica, which is our pediatric medicines business, into its first product, continues to grow across Europe. And encouragingly, there are a number of drugs for pediatric medicines coming through that we hope will be launched over the next 12 months or so. So the three businesses are growing in value, but importantly, they are trading well and offer potentially value accretion over time. Next slide. Quantexa did drive a big uplift this year, and that was off the back of a specific transaction, which was their their Series E fundraising, where they raised £100 million from GIC, who are the Singapore Sovereign Wealth Fund, and very encouragingly, the valuation ascribed to that transaction was £1.4 billion. It was importantly, it was deemed to be the only unicorn in the first half of this year, and a unicorn is a company where the valuation is in excess of £1 billion. The company's always been very AI focused, but as you will all be aware, big inroads being made in AI, and we were very pleased to see Quantexa announcing that they're going to be investing some 125 million in AI research over the next 3 years, and of that, 85 million will be spent on a specific centre in the UK. And it's nice to see this Rishi Sunak recognising what Quantexa is doing, but also very much agreeing with our analysis that the way AI can be applied to many of our software companies offers a really interesting opportunity for us. So Quantexa going well. It's been a big driver of value. It's very much one of the most successful technology companies in the UK currently. Next slide, please. Lots of new investments, as I described. I'm going to pick up on Pepe and Tokyo in a moment. And then just very briefly, Peak Data is a business that helps pharmaceutical companies identify sales leads. And then CS Genetics is very much in the sort of life science space, all around single cell sequencing. And then Outthink is very much in line with our sort of digital security theme, helping companies ensure that the employees are up to date in terms of their cybersecurity responsibilities. So providing real-time testing that staff in an enterprise are complying with cybersecurity rules within those enterprises. If we turn to Pepe on the next slide, this is an investment that we made specifically to back their move into the US, and that is a theme of that we're seeing is that a number of our companies are looking to raise money because the opportunity has come to expand outside the UK shores. This is very much growing UK companies to be more global in their outlook. Pepe helps companies look after their employees. So it provides a platform around the sort of underserved health and wellness areas that have become sort of identified as a detriment to the performance of employees. So helping with managing menopause was their first product, but it's going to be more wider areas around fertility and the like. So this is a business that is growing very rapidly, selling into large enterprises in the UK, and now moving into the US, becoming already. This was a Series B fundraising, so it was a slightly later stage than some of our other investments, which reflects why we invested 8 million across our various VCTs, of which 1.4 million was from this fund. And if we move to the next slide, Tokyo is very much fits into our fintech. It's all about allowing enterprises to typically non-financial institutions specifically to launch financial products in a very easy way. So effectively, it provides the technology that would have been hugely complicated and complicated historically, which can now be deployed. For example, if a company wanted to launch a new credit card, would be it. And we invested 7.4 million, of which 1.3 is from this fund, and this is all around building their sales marketing function, and then expanding the product. Move to the next slide, please. As you would expect, the strategy is very much to invest in businesses and then to continue investing as they grow. Helios, our platform for looking after the mental health of young people, is doing great work supporting this crucial area and supporting the NHS with capacity to do that. Runa, which you may remember as WeGift, that's been rebadged, continues to grow and provide digital incentives and rewards. Selden continues to help the deployment of machine learning models, and then Gravity is our API platform, which that is growing nicely. So great to be supporting these companies as they grow and become more important companies within our portfolio. And by more important, I mean more valuable. All our companies are important. Next slide, please. Realizations, so proceeds from exits, down. That's very much in line with the environment, which is seeing generally M&A activity far lower, and that's as enterprises become more inward looking and less inclined to pay strategic prices for acquisitions. So Zift was an investment we've been in for a long time. Not a great result at 0.7 times our investment, but it's good to, there will be companies that aren't successful, and to be able to realize value for them, it's helpful as part of good housekeeping of the portfolio. And then Aracor, you may recall, was a name float, and we've been gently selling down, but on that exit, that was a 2.1 times return, which is perfectly respectable. Next slide, please. I won't dwell on this, as I know many of you will do it, but the core of what we do is to back early stage companies focused on B2B software and healthcare, which health tech is the most important constituent. And we can invest early, and as in the case of Pepe, the example I gave just now, there are situations where we would invest in Series B. So that's companies that will have up to 10 million of revenue, for example, whereas seed can be very early stage. But it's all about long-term trends, and it's all about backing mission critical products and services. Next slide, please. We continue to develop the ESG and responsible investing approach of this fund. It's a commitment that we've made. So we're looking at how we can overlay that ESG approach to how we invest and how we operate the portfolio. And this is to make sure that we're delivering the right sort of responsible investing approach for investors who we know are keen to steer the ESG overlay. And that's all around thinking about ESG at every stage of the investment, from whether we're making new investments, whether we're managing the portfolio, and indeed when we come to exits. But importantly, increasingly measuring the sustainability and social impact of our investments. And if we move to the next slide, I'll just pick up some of the sorts of areas where we've been working. This is a sort of mixture of what we're doing is Albion the business, but how that also feeds through to the funds. But we continue to work to a net zero target of 2030. At the moment, we are achieving that by purchasing carbon removal permits. And I suppose from a fund perspective, a sort of an important initiative that we're doing is to reduce the amount of physical paper produced, because we are still sending out more paper than we would like. Therefore, we are actively encouraging moves to electronic communications, because I know many shareholders would like to see less paper waste, particularly when so much information is now easily available on our website. Looking sort of more broadly at the sort of particularly around inclusion in the VC industry, we are very conscious of really two things: is that we want to make those in venture capital a more diverse and inclusive place to work, and we also want to make sure that we are investing in a broader range of founders, and we are mindful of the fact that the number of female founders being backed by VC is lower than it should be. So we've done two things on that. We're now sort of actually running sessions for local for students who come from backgrounds that wouldn't normally consider venture, sort of explaining how venture works and what the opportunity is. And I have to say, having just met the group that came in just a couple of weeks ago, there are some very, very talented people out there. So the value of spending time with that is absolutely clear. And then through our our Radio Accelerator program, we are actively going out and supporting women who wish to find business. So lots to do. There's no getting away from that, but nice to see movement on this, and then obviously continuing to report on where the portfolio is getting in terms of ESG, continuing with UN PRI. We want to improve that score over time, but importantly, incorporating lots of ESG updates within our reporting to you as shareholders and to the VCT board when we report quarterly to them. Next slide, please. So looking forward, the macroeconomic geopolitical environment isn't going to change in the short term. I think we need to be realistic about that. Therefore, whilst the portfolio will see revenue growth, realistically, it is going to be slower than we have seen in previous years. But we can take comfort from the fact that the portfolio is well balanced across our target sectors and portfolio. And importantly, they are growing. It's about the rate of growth rather than growth. That's not to say that there will be, as you would expect in a venture portfolio, there will be businesses that do better than others, but still focusing on those mission critical products, those products that the companies just can't do without, which in itself delivers pricing power, and very much relying on that approach to create a long-term resilient portfolio, continuing to stay away from discretionary consumer-facing businesses. I mean, the consumer is clearly in current times is having a difficult time. The cost of living crisis is well documented, but we do have good cash levels, and it's a good time to have cash, and we will be able to capitalize on new opportunities as they come through, but also supporting those portfolio companies that continue to grow. So lots to be optimistic about, but obviously we just need to be cognizant of a more challenging environment that I think is going to take a bit of time to work through. Next slide, please. Just touching on the results that have just been announced. So this is covering the quarter to 30th of June. Small negative return of 0.9%. Unsurprising, I think it's just a one quarter result, so probably nothing to focus too closely on. But clearly in my prospects, I've given you a sense of direction. We'll continue to do virtual AGMs as we're seeing good engagement. Just a plug for our shareholder seminar, which is a face-to-face event where we get various speakers in. We get portfolio companies. We run discussion forums. That's on the 15th of November at the Royal College of Surgeons. Please reserve your place by dropping us an email at info@Albion Capital. Places will be limited, so it will be on a first come first served basis. And if you do sign up and are then unable to come, please do let us know, because I suspect we will have a waiting list, and it'd be nice to be able to free up that space for others. Just a reminder, the top three investments, and that June, that's sitting at 33.9%, so very similar to what I have just reported at March. So lots going on. Very much look forward to meeting a number of you face to face, and hopefully this has been a useful update, and we can pick up the various questions that hopefully have come through while I have been speaking. Next slide, please. And I will now hand over to Max, who has the unenviable task of comparing the Q&A. Max.
Thank you, Will. We'll now deal with the questions that have been received from members. Will, we've had several questions regarding Contexa, perhaps unsurprisingly. Could the board please comment on the company's ability to realise the investment in Contexa whilst maintaining compliance with the requirement to keep at least 80% of HMRC value in qualifying holdings?
Yes, I mean it's something we're always looking at. I mean, complying with the rules is what we absolutely have to do. We do that in two ways. We have an external specialist that reviews it quarterly on behalf of the board. But as you'd expect within Albion, we're looking at it almost in real time and formally every month. So we're constantly sort of scenario planning. Quantexa is a significant element of the portfolio. When that does exit and we will have a full 12 months in which to reinvest that. And we'll be, we've got used to managing the ebbs and flows of cash over time, and we'll be looking at any actions we might take in the context of the cash requirements of the fund. So those are paying dividends, making new investments, follow-on investments, buybacks. But of course, the board, is to the extent there were any surplus, there is surplus cash, then the board could consider and would consider paying a special dividend.
Thank you, Will. What are the plans for managing this investment when presumably any further investment rounds will result in the company's shareholding being diluted and the investment manager's influence reduced?
Yeah, so this is a feature of what we do, is that there's a point in time where we don't follow investment because the company has become too large and is able to attract non-tax incentivized money, and that has happened here in Quantexa. But important, we're used to managing that. But the important point is that because we invest early, we end up with a sizable stake in the business. And if you look at Quantexa, we are still the second largest institutional shareholder, despite an element of dilution that has happened because we weren't able to participate in the last round. So it's manageable. It's certainly something we have to be aware of, and it's certainly something that we think about a lot.
This next question has really partly been answered by your presentation and then the last remarks. But when was the last investment in Quantexa, and did the company participate in it?
So no, we didn't participate. I'm just trying to remember. I think it was April this year from memory. Yeah. So yeah, no, we didn't. But as I say, it was as you heard, it was a relatively small fundraising for a business of this scale. I mean, it's still 100 million, and it was at a very strong valuation. So the dilution effect was relatively low from our perspective.
Thanks, Will. Clearly, the valuations of investments are crucial to in our accounts. The question is, what comparable companies or benchmarks do you use when valuing investments, and are public companies used, as these are not necessarily of a comparable size to the unquoted investment the company invests in?
Yes, I mean, when we're looking for comparable data around valuation, we look at a number of things. But clearly, the quoted market is the most readily available data of a comparable company. So what we talk about is having a basket of similar companies that gives us a view of what sort of multiples might be applied, whether that's to revenue or profits. So, and as the question points out, clearly these companies are not directly comparable because they're typically more liquid and larger. So therefore, we then apply a discount to the multiple to reflect that. So effectively applying a lower valuation, and the size of that discount varies. It's situation specific, but it can be quite large. So you are building in, into that approach, the fact that they're comparable in terms of what they do, but not necessarily in terms of scale.
Again, staying with valuations, some of your investments are valued as third-party valuations. Is this instead of or in addition to the Albion Capital's valuation? And does this imply that Albion Capital's valuation has been overridden?
Right. Okay. Yeah. So third-party valuation is very specifically around the sort of legacy area of our portfolio. So this is how do we value our renewable energy assets? How do we value the couple of schools that we've got? This is clearly a small part of the portfolio now. And by third-party valuation, that simply means that we go out to a specialist who are typically chartered surveyors, and that is how we get the comparable data, because they are looking at all the transactions in the market and then coming up with their own valuation. So it's not overriding us; it's the methodology we get to value and to get independent valuation of the underlying assets. So, for example, the wind turbine, and then that forms the basis of our valuation. And clearly, within these companies, there are other things to value than purely the asset, cash on the balance sheet, and net assets. So it's definitely not replacing Albion. It is part of the valuation process of which we produce on a quarterly basis. But the actual third party valuation is updated annually.
Thank you. When a company is described as knowledge intensive, what does it mean?
Because this is getting reasonably technical, and the reason why we talk about knowledge intensive businesses is that under the VCT rules, you're able to invest in these companies when they're for longer, and that goes to the heart of what a knowledge intensive company is. It's basically a company which is very focused on R&D. So they are R&D intensive. And because of that, the rules allow us to invest more into them because they typically might be a deep tech company that needs more funding to get there. But it also means that we can support them for up to 10 years. And the way that is defined, so what is that? It's how do you measure R&D? That's done in one of two ways. It's either the quantum of R&D spend, so how much is it spending above the required threshold, and it also the other way of looking at it is how many R&D employees. And they look at people with a master's degree or higher as a evidence of research. So it's a way of defining the elements of our portfolio that's more R&D focused, therefore needs more time to deliver and is likely to need more funding to achieve its business plan.
Thank you. One for me, well, succession planning. What succession plans are in place for the two directors appointed in 2006 to limit the risk of losing so much corporate memory in a short space of time, having lost two previous long-standing directors? Well, the board believes that the new directors definitely do bring a valuable new perspective. And in recent years, we've had two long-standing directors retired, as the questioner mentions. One was in 2020 and the other was in 2021. And in this time, two new directors have joined the board. That's Rodri Whitlock, who joined in January of 21, and Pippa Latham, who joined in September of 21. Chris Burrows was also appointed in June of 2018. And as part of the recent annual review of the nomination committee, a review of succession planning, including considering tenure of existing board members, was undertaken. The nomination committee felt that the experience that both Patrick and I had remained important and was considered a benefit to the company and to shareholders. And the retention of the corporate member was especially important given the current economic climate. Moving to the annual report. In the annual report, some of the top 10 investments in the accounts, why are only filleted audited results shown?
Oh, okay. Yes. So this is in the disclosure in the accounts to give underlying financial information on the portfolio companies, and what that is driven by what information has been publicly disclosed by those companies. So if it's filleted accounts, those companies are of a size where they are not required to file their accounts at Companies House. Therefore, more detailed information isn't publicly available. And obviously, we can't disclose information that the companies themselves have chosen not to disclose. The ones that do, and it varies company by company, but we have to be driven by what the company itself is publicly disclosing.
Right. We've had a good question across the Lumi platform, which is, how do you propose to earn a meaningful real return for investors in a period of likely persistent UK inflation? That's
an excellent question, but I suppose the easiest way to answer it is looking at the sort of returns that we target anyway. So if you look at our 10-year performance, that averaged 10%. Now, obviously, we've had a peak of inflation up at around 11%, which has now dropped. So the good thing, I suppose, the encouraging thing is that if we can continue to deliver that sort of longer term, that is at least covering inflation. To the extent, can we grow that to reflect that inflation is higher? The benefit of venture investing is that you can deliver some strong returns through backing out large companies. And indeed, the companies that we backed, many of them have recurring revenues. And those, so in terms of the software contracts that they have with underlying companies, and to a greater or lesser extent, they have inflation rises in there. So there's a little bit of sort of hedging. But I think the broader point is that what we're doing in venture is backing young companies that can grow and capable of growing well beyond the sorts of inflation even at the current levels. And with a bit of luck, inflation will come down. Although I do accept the premise of the question, which is it feels quite unlikely it's going to get to 2% anytime soon.
Question on fundraising, Will. Please can you update shareholders on your expectations regarding fundraising in the coming months?
Right. So this is very much a decision for the board, of which we obviously provide a recommendation, and as in previous years, what we will be doing over the coming months is looking at what the cash requirements are for this VCT and indeed the other Albion VCTs, and that's in the context of investment rate. That's an expected level of exits, dividends, buybacks, all the things that we have to think about and follow on investing. And then on basis of that, we will make a recommendation to the board as to what an appropriate level of funding they might consider. So the short answer to that question, watch this space. Will be as soon as we're able to be more prescriptive on our plans, we will be.
Thank you, Will. That concludes the questions that we have. So we'll now continue with the formal business of the AGM. The full text of each of the resolutions was set out in the notice of the meeting, and the board is recommending members to vote in favour of all the resolutions. I'll briefly summarise the resolutions. The first resolution is to receive and adopt the company's accounts for the year ended 31st of March 2023, together with this strategic report and the reports of the directors and auditor. The second resolution is to approve the directors' remuneration policy. And the third resolution is to approve the directors' remuneration report for the year ended 31st of March 2023. The fourth resolution is my own re-election as director of the company. And the fifth resolution is the re-election of Christopher Burrows as director of the company. The sixth resolution is re-election of Pippa Latham as director of the company. And the seventh resolution is the re-election of Patrick Reeve as director of the company. The eighth resolution is the re-election of Audrey Whitlock as a director of the company. And the ninth resolution is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. The 10th resolution is to authorise the directors to agree the auditor's remuneration. And the 11th resolution is to allow the directors to allot shares. The penultimate resolution is a special resolution that will give the directors the power to disapply preemption rights. And the final resolution, which again is a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on the Albion Capital's website as soon as reasonably practicable. I confirm that the poll voting is now concluded, and I now declare the poll closed. In the meantime, I'll show on the screen the current proxy votes that have been received by the registrar. As you'll note, the proxy votes are comfortably in favour of the proposed resolutions. Thank you. That concludes the formal business of the AGM. I'd like to thank all members who've joined this AGM by webcast. The board welcomes any feedback you may have, which you can do by sending an email to aaevchair@albion.capital. For those of you who are interested in seeing a recording of the AGM, this will be available on the Albion Capital website in due course. There being no further business, I declare the meeting closed, and I wish you a healthy and happy rest of the summer, and thank you all very much for attending.